work remote, be a digital nomad, and work your own hours. All of these are things that people aspire towards, and some of them might actually look towards working in a startup job in order to achieve this. Now, while that may be the case, there is an ugly truth that you need to know before you choose to work at a startup, in this case as an employee. What is going on, everyone, and welcome back to my channel. On this channel, and backed by my background in economics, finance, and crypto, I help young people punch above their weight for their experience level and age and achieve freedom without having to wait decades like everyone else. Now, if all of that sounds interesting to you, do consider leaving a like and subscribing to this channel so you do not miss future uploads. With that out of the way, let's jump right into today's video where we're going to be discussing the ugly truth about startup jobs. We'll be going through 3 key lessons that I personally learned working at a startup job before moving into my current role. This was, of course, in the Web3 and crypto space, so this might also be more specific to a more volatile industry. Nonetheless, all of these 3 lessons are things that you can take away in order to make sure that you go into this knowing what to expect. And the first lesson is going to be to treat your job or your employer, in this case the startup, as a client. Now, what do I mean by this? Well, the ugly reality of a lot of these startup jobs, wherein it's basically founder-led and you're expected to have the same level of buy-in into the company with little of the upside, is that there's going to be constant task inflation over time. Now, when I was working at a startup, this obviously was the case. Basically, later down the line, you may be asked to do more volume of work or take on more responsibilities, often without a commensurate increase in compensation. Now, while all this might sound like something from the anti-work subreddit or something along those lines, you are there on a defined contract. You have defined benefits that you're getting every single month, but theoretically uncapped costs if you do not set these boundaries and watch task inflation. So that is the first lesson that you're going to want to take note of if you're going to go into this just for the paycheck and just to get some cash. Which brings me on to the second point, which is to treat them as a borrower. By this, I mean to use a credit lens to assess them. Now, personally, I came from banking, and in banking, we assess every single borrower based on several metrics, such as their cash flow, as well as their past earnings, along with any security that we might have on the loan in order to make a decision on a potential internal rating for that transaction. Now, how does all of this translate over into working for a startup? Well, unlike working for a Fortune 500 or similarly large company that is well established and is typically rated investment grade and above and has established payroll systems in place, for instance, a lot of these startups tend to be strapped for cash. When I was working for a startup, I remember multiple occasions where, for example, payroll was delayed. Basically, the entire operation depended upon funds raised from investment rounds to carry it over to the next month and future years. So this is one thing that you don't even think about when you're working at a large company like a Fortune 500 that you're going to need to consider if you choose to work in a startup. You're going to want to do a bit of credit analysis, some financial analysis, see how well they are capitalized, for example, as well as how their business is actually performing, and realistically make a judgment on whether or not this business is likely to turn a profit if it is one of the startups whose present business model is burning through VC money. This is especially in a cyclical industry like crypto or in high growth industries, because there are going to be economic cycles like we've seen in the bear market where raising funds is difficult and a startup basically cannot afford to pay as it did before. Now, along the same lines of the credit lens, borrowers with a poor credit rating or a poor credit score in the case of consumer credit receive higher loan interest and worse loan terms. Similarly, when looking at these kinds of high risk employment plays, before accepting any offer, you're going to want to consider a significant risk premium that is required, i.e. that is a merely competitive offer that is largely comparable to your previous role at a much larger and low risk corporation, for instance, is not sufficient unless it is paired with significant ancillary benefits or better working conditions, such as, for instance, being able to work from a lower cost of living location. Otherwise, you're going to want to expect a significant bump in total compensation. And high risk is the theme of the day, which brings me on to the third lesson that I learned about the ugly reality of startup jobs. And that is going to be that you always need to hope for the best, but prepare for the worst. Now, while this applies to any job, when you're taking up a fixed paycheck, you're basically trading the volatility of running your own business for the stability of a monthly paycheck, which is a fair trade in many cases. But in this case, if you're going to be working for a high growth and high risk startup, then you're going to have to come to terms with the fact that you're basically not really trading away the volatility here, because the going concern of said startup may be less robust than, say, a Fortune 500 company. Now, in terms of actions that you can take if you are just hoping for the best but preparing for the worst, if you want to get exposure to the startup world, is to actually start working there on a part-time basis while keeping your main job. Now, while this might not sound like something that's very appealing if you're the type to go and maximize lifestyle and minimize working hours, this is probably the prudent way to go about gaining exposure to the sector, potential upside later down the line if they were to reward you in some sort of equity, while also allowing you to punch above your weight class in terms of income while times are good. Now, if you're interested in the latter, i.e. earning a higher income than your experience might allow at the moment, then you're going to want to stay tuned to this channel, because that video is coming up very, very soon. So all in all, those have been the 3 key lessons that I learned working in a startup job and the ugly reality of working there. It is not all sunshine and rainbows or working from the beach. Hopefully you found this video informative and interesting. If you did, do consider leaving a like and subscribing to this channel. And if you're interested in content about getting ahead and about achieving financial freedom faster, especially in today's economy, then you're going to want to check out this video here. With all that being said, thanks for watching, and I'll see you in the next one.